Okay, so good morning once again, everyone. No, so let us continue our video discussion series for lease accounting. So we are now on part 3. Okay, and in this video we will tackle the accounting treatment for lease transactions. Okay, for lease transactions, subsequent recognition. Okay. So, if you may remember, in our first 2 videos, okay, we have known the basic concepts of lease, okay, the difference between the accounting treatment in the lessee's perspective and in the lessor, or in the lessor's perspective, di ba? And also, we have known na under the lessee's perspective, okay, on initial recognition, the lessee recognizes a right-of-use asset and a lease liability primarily because, in the lessee's perspective, all types of lease are to be treated as a finance lease, except in cases which are allowable to be presented as an operating lease, diba? So, also, or on the other hand, on the lessor's perspective, there is an option between the lessor presenting the lease transaction as an operating lease or a finance lease, no? Provided the criteria for the lease transaction suffices the characteristics required for it to be presented as an operating or a finance lease, di ba? So basically, we have learned what is an operating lease and a finance lease also, no? So, in this discussion video, we will try to dissect, understand, learn, okay, the accounting treatment for lease transaction if or during subsequent recognition or subsequent periods after the initial recognition. Okay? So let's start with the lessee. Okay? Let's start with the lessee. Okay? So in the lessee's perspective, okay, because the lessee, okay, recognizes the right of use asset and it recognizes also a lease liability, okay, a lease liability, we will have two separate accounting treatment in these two accounts, okay? We will have two separate accounting treatment in these two accounts. So, let's start, okay? Let's start with right of use asset, okay? Now, under the guidance of IFRS 16, okay, it is, or subsequent recognition, okay, this right of use asset should be depreciated, okay, Why? Because in essence, if you look at the transaction, this right of use asset represents our ownership in the form of right to the asset, okay, na in substance acquired through finance lease. So that means, because this represents the ownership rights or the title in the form of rights, okay, it is as if we are owning the subject of the lease. Okay? It is as if we own the subject of the lease. Thus, we need to depreciate. Okay? We need to depreciate. Now, the problem here when it comes to right of use asset is that, madali lang naman, di ba? It is easy to compute for depreciation. The problem is, what will be the basis for the depreciation and what will be the method use? Okay, what will be the method used? So, in general, okay, if we are to depreciate, okay, if we are to depreciate this right of use asset, we will use the straight line method. Okay, remember that, ha? We'll use the straight line method. The basis of the straight line method, or or what will be our basis for the straight line methods in terms of life, is basically the shorter, okay, the shorter between the lease term or life of the asset. Okay? Remember, the shorter. Okay? So, kung saan ang mas maliit na period, yan yung gagamitin natin pag depreciate. Okay? Yan yung gagamitin pag depreciate. Now, except, okay, except for lease transactions wherein there is transfer of ownership. Okay, there is transfer of ownership, or title would pass to the lessee in substance. Or in substance, okay, if the transaction would imply, okay, would imply or explicitly stated in the term na there is a transfer of ownership, then this is, or this will not be our basis, but rather, okay, but rather we'll use life of the asset. Okay, life of the asset. So again, to depreciate the right of use asset, we'll use the straight line method. In general, the basis is lease term or life of the asset, whichever is shorter, except for lease transactions wherein in substance there is transfer of ownership. Then, if that is the case, then we'll use life of the asset. Klaro yun siya, ha? Now, how would we know if there is transfer of ownership? Number one, if it is specifically stated na there is transfer of ownership per agreement. Number two, if there is a purchase option by the lessee, meaning binigyan si lessee ng option to purchase the subject of the lease at a price sufficiently lower than the fair market value, then in substance there is transfer of ownership. Okay? But provided, okay, provided that that purchase option, okay, that purchase option would or is reasonably, like what we have learned from our first video discussion, it is reasonably certain that this will be exercised. Okay? So if that is the case, then use the life of the asset. Okay? Now, as per recording, okay, as per recording, as to recording this transaction, it is fairly straightforward. Okay, it is fairly straightforward. Wherein, we will only debit depreciation, expense, credit, accumulated depreciation. Okay, very straightforward. That pertains to your right of use asset. Okay? Klaro yun siya, ha? Now, as to presentation, okay? As to presentation, IFRS 16 also is telling us or guiding us, requiring us na this right of use asset, okay? This right of use asset should be presented in the statement of financial position, okay? At carrying amount. Okay? That is the initial cost as recorded during the initial recognition less your accumulated depreciation. So, klaro yun siya. Because we are to present it at carrying amount. The next question there is, alam na natin or we already know that it is to be presented in the statement of financial position because it is in asset. But where in particular in the statement of financial position or the balance sheet? Okay? The standard tells us, okay, na this is or the right of use asset is to be presented, okay, in line, okay, in line or in conjunction with how do we present, okay, how do we present the subject of the lease, assuming, okay, assuming if we own it. Now, instead of renting it, we own it. How do we present it? In conjunction with that, no? So, meaning, ang ibig sabihin lang yan is that if the subject of the lease is a machinery, okay, then we present the right of use asset at its carrying amount in line with how do we present the machinery. So that is under the line item of property, plant, and equipment. Okay? Para mas clear. Okay? Para mas clear. Okay? Right of use asset. Or also, it can be, kung gusto mo talaga na i-separate siya, pwede rin other asset basta with proper disclosure. Okay? With full disclosure. But industry practice, mas maganda talaga na doon sa line item kung ano talaga yung purpose ng lease mo. Okay? So, at its carrying amount. Okay? Actually, ang point lang naman dito is that subsequently, we need to depreciate your right of use asset. Ha? So, the next account, okay, the next account is itong lease liability. So how will we recognize subsequently this lease liability? Okay? The standard, okay, IFRS 16 requires us that this lease liability should be amortized using the effective interest method. So, madali na lang sa atin ito because we already know what is or how we apply the effective interest method. The point in this requirement lang kasi is that every time na there is payment, okay, every time there is payment coming from the lessee, it should be, or the payment should be properly designated as to what portion of that payment relates to the principal because yun nga, the lease liability is measured at discounted amount, present value, di ba? So what portion of the payment relates to the principal, that will be deducted to the carrying amount of the lease liability. And what portion is the interest expense? Kasi nga, we are applying the present value concept in measuring the lease liability. Okay? So, in that sense, okay, every time there is payment, okay, every time there is payment, our entry basically would be to debit your lease liability because there is payment nga at an amount equivalent to the applicable principal coming from the gross rental payment. Okay? And also, there should be recognition of interest expense. Okay? The credit would be to cash, obviously, which applies to your agreed rental payment. So, pag sa agreement, 500,000. So, itong cash, yung credit mo, 500,000. Out of that 500,000, meron talaga dyan na would pertain to the principal that will be deducted to the carrying amount of the lease liability. And there is also a portion of that to your interest expense. Okay? So that is how we recognize it, ang lease liability. Now, later on, we will have exercises to show how we will do it, no? So, just remember this concept. Now, we will use effective interest method and we will have this entry. So, that is for the lessee. Okay? That is for the lessee. Now, on the part of the lessor, okay? On the part of the lessor, okay? Di ba nga, or under the perspective of the lessor, di ba nga, it can be na yung lease transaction is recognized as an operating lease or it can be as a finance lease. Di ba? So, if it is an operating lease, very straightforward yung subsequent recognition natin dyan. That is, only to recognize the cash as a debit, then credit your rent income. Very straightforward pag operating lease. However, pag finance lease, medyo naging komplikado siya because under the, or if the transaction or if the lease transaction is a finance lease, then again, we need to recognize the portion of the rental received or collected. Okay? That the portion of that na or which is applicable to your interest income. Okay? Which is applicable to your interest income. How will we do it again? We'll use effective interest method. Okay? We'll use effective interest method. Applying your implicit rate. Okay? Now, dito lang, okay? May but kasi dito. Okay? May but. Kasi, this is not your typical application of your effective interest method. Why? Because if you are the lessor, okay, and the lease transaction is a finance lease, ang gamit natin for effective interest method is for us to know what is the interest income only. Okay? Not the amount applicable to your principal rental. Okay? Why? Because on subsequent recognition under the finance lease, lessor perspective, the cash collected, okay, remember this, the cash collected is always recorded as a debit to cash, credit to lease receivable at gross amount. Meaning, if we are to collect as rental 500,000, the entry would basically be debit cash 500,000, credit lease receivable 500,000. Not the same concept as lessee. Now we need to break it down, di ba? Break it down as to which is applicable to your principal and break it down as to which is applicable to your interest expense. Dito, automatic at gross amount cash lease receivable. Kasi nga, makikita natin yan siya sa entry na, kumbaga, kung titingnan natin, kung babalikan natin yung entry natin sa finance lease, di ba ito yon, no? Debit lease receivable tayo example, no? This was recorded at gross. So, ang payment nito should always be at gross. Unlike to your lease liability which was recorded at present value. Okay? So, that is the point now. So, if we have presented or prepared the effective interest amortization schedule na ngayon, after the collection of the rental payment, the next entry for this is to recognize the interest income, applying the effective interest method amortization schedule. Okay? Now, what is the entry? Debit your unearned interest income, credit your interest income. Okay? Kasi nga, again, going back to our entry, yung representative of the interest income was credited to your unearned. Diba? Was credited to your unearned. So, every time na may payment, makaka-earn ka na talaga ng interest, which is recorded as a debit to your unearned interest income, credit interest income. Okay? So, that is for the lesson. Now, for us to fully understand this concept, okay, let's continue our example for overland company, no? For overland company. So, okay. Di ba? This is our problem, no? So, we have already recognized this initially. So, the point is, subsequent recognition naman. Okay, subsequent recognition naman. So, let's start with the lessee. Okay. Subsequent recognition for right of use asset. Okay, for right of use asset. Now, if we go back to our entry for the right of use asset or on our computation, okay? Diba? Sana nga yun. Ito. Diba? Our right of use asset, we have already computed it at 3,890,000. Whereas, our lease liability, because there is no other factors affecting the lease liability in the lessee's perspective, okay, in the lessee's perspective, it was only 3,790,000. So, again, problem is, how will we depreciate the 3,890,000 right of use asset? Okay? The right of use asset. Now, let's look at the problem. Because, again, the first thing that we need to do is that if there is ba a transfer of ownership, which, in this particular problem, okay, in this particular problem, mayroon. Di ba? Ito, specifically stated na although the terminals have a composite life of 10 years daw, the lease runs for 5 years with a transfer of title to the lessee upon expiration of the lease. So what does it tell? It tells us, or what does it tells us, no? It means na because there is a transfer of title, this right of use asset should be depreciated using the life of the asset, which is 10 years. Kung wala lang sanang transfer of title or walang option to purchase, which is hindi naman talaga nakikita dito. For example lang, kung wala siyang option to purchase na, which is reasonably certain to be exercised, then we'll use the short term between the lease term and the life of the asset. Okay? So, let's just compute. Okay, let us compute the depreciation. So, that is 3,890,000 divided by 10 years. Plain and simple because again, wala din siyang residual value. Diba? So, um, 3,890,000 divided by 10, we are to recognize 389,000 of depreciation annually. That is our subsequent recognition. Okay? That is our subsequent recognition. Now, how will we journalize it? Debit, depreciation, expense, credit, accumulated depreciation, plain and simple. Okay, 389,000. Assuming this is, or basically, di ba, this is 12/31/2020 at year end, then this will be the same entry if there are no other, okay, if there are no other transactions that would affect this lease transaction, then in 2020, 2021, 2022, 2023, and 2024, because 5 years yun siya, ito yung entry natin. Okay, ito yung entry natin up to 2024. Now, very basic, if we are to be asked, as of December 31, 2020, what is the carrying amount of the asset or what is the carrying amount of the right of use asset? Then obviously, 3,890,000 less your accumulated depreciation, which is at 389,000. So, this right of use asset, the carrying amount of it is 3,501,000. This is your carrying amount. No? Plain and simple, no? Very, medyo madali lang siya. Wala pang masyadong komplikasyon, no? So, next. How about the lease liability? Again, we'll use the effective interest amortization schedule. Okay, we'll use the effective interest amortization schedule. Okay, now, let's make the amortization schedule. So, we'll start with date. Okay, we'll start with date. Then, the rental payment. Okay. Then, your interest. And then, the applicable to principal. And then, the next column would be your carrying amount. Okay? The next column would be your carrying amount. Okay? Now, the date, let's start with January 1, 2020, which is the first date of the lease. Then, the first amortization schedule, which is every end of the year at December 31, 2020, which is given by the problem, di ba? So, the next is 12/31/2021, 12/31/2022, 12/31/2023, and last payment, 12/31/2024. Okay, 12/31/2024. So ngayon, okay, the rental payment here, okay, the rental payment here That is 1 million every amortization schedule. Okay, di ba? So, kita nyo, that is 1 million every amortization schedule. Yan, oh, di ba? So, now, the carrying amount on January 1, 2020, that was 3,790,000 because there were no other factors that affected the lease liability. So the interest, okay, again, we'll use the implicit rate, which is in this particular case 10%. Okay, 10%. So now, the interest expense on December 31, 2020, that is computed as 3,790,000 times 0.10%. So that is 379,000. 1 million divided by that 1 million less that 379,000. So the applicable payment to your carrying amount is 621,000. 621,000 deducted from your carrying amount. The carrying amount on December 31, 2020 is 3,169,000. Okay? So if we are to record on 12/31/2020 pertaining this transaction, okay, we will debit lease liability, okay, at 621,000. Debit again interest expense at 379,000. Okay? Credit your cash at 1 million. So ito yung sinasabi natin na yung rental payment na 1 million inallocate natin between the principal and the interest. Okay? So medyo madali lang. As long as we know how to make our effective interest amortization schedule. Okay? So if we are to continue the schedule, so 3,169,000 carrying amount on December 31, 2020 multiplied by 10% again, so that is 316,900. That is your interest expense for 2021. Deduct that from the rental payment of 1 million. So we have 683,100. Deduct that to your carrying amount on 2020, December 31, 2020. Then we have a carrying amount of 2,485,900. Go back to the process again, multiply that by 10%. So we have 248,590. Deduct that to your rental payment na 1 million, that is 751,410. Deduct that to your carrying amount. So we'll have 1,734,490. Multiply again to your 10%. That is 173,449. Deduct that from rental payment. Diba? So, balik-balik lang ang process, no? Medyo tedious lang, pero madali lang siya kasi repetitive yung process. Okay? So, 907,939. Okay? In the last amortization schedule, which is on 12/31/2024, to be practical, kasi nga, this would always cause rounding of differences. Diretso na lang tayo, or to get your interest expense, diretso na lang tayo na 1 million less the carrying amount on 2023. No? So, that would be 92,061. So obviously, the applicable principal is 907,939. So this is 0. Okay? So after making this amortization schedule, your entry in 2021 would debit lease liability at 683,100, interest expense at 316,900, cash at 1 million. In 2022, lease liability 751,410, interest expense, cash, and so on. Okay? So medyo madali lang yung concept, no? What is important is that for us to comprehend, understand, know how to make the effective interest schedule. Okay? So, that is for the lessee. Now, in the lessor's perspective, okay, because, yun nga, basically, if we analyze this problem, this is a finance lease. Why? Because there is transfer of title. Hindi na to operating lease. Okay? Hindi na ito operating lease pagdating sa lessor because there is a transfer of title. So obviously, this is a finance lease. So how will we account this? Again, the standard dictates na pag finance lease, tapos kung titingnan natin ito, this is a straightforward finance lease because Overland Company is not a dealer of storage and freight facilities. No? This is a straightforward finance lease. Di ba? So we'll make the, again, amortization schedule to know how much interest income is earned every period. Okay? However, medyo naging komplikado ito. Bakit? Because we cannot use, okay? We cannot use this 10%, okay? We cannot use this 10% as our basis for the interest income of the lessor. Why? Because if we go back to our computation of this, diba? Ito, how we came up with this entry. The interest income, which supposedly is computed using the implicit rate of 10%, is affected by the initial direct cost of 50,000. Kaya nga, ang nangyari dito, kung wala lang sana itong 50,000, the unearned interest income that would be recognized ito on initial recognition is simply computed as 5 million minus the present value of the lease or the rental collection, which is at 1,210,000. Okay? 1,210,000. However, because meron ngang 50,000 na lease incentive, which is an initial direct cost paid by the lessor, the unearned interest income, okay? The unearned interest income was lowered down to 1,160,000. So the point is, hindi na applicable ang 10%. So now, what we will do is to determine a new implicit rate that would generate us, okay, a present value equivalent or equal to your net investment at 3,840. So how will we do it? Alam na natin kung paano. Because we have already encountered this type of complexities with our bonds payable discussion. Using the trial and error interpolation process. Okay? So, let's compute, no? So, our target present value, di ba, is 3,840,000. Ito yung hahanapan natin ng applicable na effective rate or implicit rate. Yung 3,840,000. We already know that at 10%, okay, present value of an ordinary annuity at 10% for 5 period, it was 3,790,000. So ngayon, we will apply trial and error. Okay? Applying the concept of present value factors and effective rate, we know na if the target present value amount is higher than your base rate, which in this case at 10%, diba? It means that the effective rate or the implicit rate in this case is possibly lower. Kasi nga, diba, ang concept is the lower the lower the interest rate is or the effective rate is, the higher is your value. Inverse yung relationship, di ba? The lower the rate is, the higher is the present value. The higher the effective rate is or the implicit rate is, the lower is the present value. So the point is, kasi nga, naghahanap tayo ng mas malaki kaysa 3,790,000. Okay? Na mas malaki sa 3,790,000, possibly, the effective rate or the implicit rate is much lower than 10%. So, let's try 9%. Okay? Let's try 9%. So, at 9%, if we are to compute for the present value factor of an ordinary annuity at 9% for 5 periods, alam na natin kung paano yan gagawin, di ba? So, 1.09 divided by twice equals, that is not yet to be counted. So, this is first period, present value of 1, second, third, fourth, fifth. If we deduct 1 from that, disregard the negative value, then divide with the rate 0.09, we have a present value factor of 3.890. Present value of an ordinary annuity at 9% for 5 periods. Multiply that by the rental payment of 1 million, okay? And by the way rounded off to 3 decimal point lang yan siya. So, 3.890, okay, multiplied by 1 million, we have 3,890,000. So, if we look at this, 3,890,000 ngayon is higher than 3,840 na. So, anong ibig sabihin yan? Ang ibig sabihin na niyan is that possibly, the implicit rate applicable for this 3,840,000 target amount is between 10 and 9%. So, we'll now use the interpolation. Okay? We'll now use the interpolation. So, the numerator, di ba, is the difference between your target value and the prospect present value rate, which is yung target value natin, that is 3,840,000 less your prospect or present value of the prospected rate na 3,890,000. The denominator is the base or the base rate natin, which is at 10% ang value nun, which is 3,790,000 less your present value at prospected rate, which is at 3,890. Diba? So obviously, this is minus 50,000. This is minus or negative 100,000. So, we have 0.5. Then, add that to your target prospect rate. Because yun nga, in between kasi of 10 and 9.5, we know na it is higher than 10, it is lower than 10% but higher than 9% because yung 3,890 is mas mataas na sa 3,840. Applying the concept of the inverse relationship. Diba? Inverse relationship. So it is 0.5 plus 9% or 0.5% plus 9%. So that would basically be 9.5%. The new implicit rate. Okay? So, we can now make our amortization schedule. So, again, we'll start with date. Okay? Ang rental dito is for computation purposes lang. Yun nga, di ba? As noted kanina. Then, your interest income this time because we are in the perspective of the lessor at 9.5%. Then we'll have the principal for computation purposes lang again ito. Okay? Then carrying amount. Okay? So yung date 01/01/2020 again 5 years. So, the first payment is December 31, 2020, December 31, 2021, 2022, and last schedule, December 31, 2024. Rental is 1 million, 1 million, 1 million, 1 million, and 1 million. Okay? Carrying amount, we have 3,840,000. Equivalent to your net investment. Diba? Times 9.5% for the interest. So we have 364,800. Deduct that from your 1 million. Oh. Ito na naman tayo, no? Yung pabalik-balik na process. 3,840. 3,204. 800. Multiply that again to 9.5. So we have 304,456. Deduct that from 1 million. 695,444 plus 3,204,800. So that is 2,509. 256. Multiply that by 09.5. So that is 238. Rounded off na lang natin ito na 380. Okay? So, deduct that from your 1 million. We have 761, 620 plus 2509, 256, 1747, 636. Multiply that by, again, 9.5. So we have 166,025. Okay. Deduct that from 1 million. So 833,975. Deduct that to your carrying amount 1747636. We have 913661. Again, to be practical, diretso na yan siya to get your interest income. Deduct ito your rental payment. So that is 86,339. Then that is 913661. So 0. So that is your amortization schedule. Again, ito lang yung importante for us to recognize the interest income because ultimately, this 1 million na rental collection is debited to cash, credited to lease receivable. But before our entry, let us check muna the amortization schedule. No? Let us total this. Okay? Kung sakto ba sa unearned interest income natin. That is 364,800 plus 304,456 plus 238,380 plus 166,025 plus 86,339. So that is 1,160,000. Kung titingnan natin yung original entry natin, the unearned interest income was recorded at 1,160,000. So, sakto siya, no? So, how are we going to journalize that? On 12/31 or December 31, 2020, first entry, the collection. Debit cash, credit, lease, receivable. Okay? At 1 million. Okay? Next entry, the interest income. Debit, unearned, interest, income, credit your interest, income. At 364,800. Okay? On December 31, 2021, debit cash, credit, lease, receivable. Again, still at 1 million. Okay? Next entry, unearned interest, income, credit your interest, income. Again, ito na kasi 2021 na tayo. Ito. Okay? 304,456 and so on. Ito. Ha? So that is your general entry for that. Di ba? So again, madali lang siya if we know the concept of the effective interest schedule. Always remember na if there are factors affecting the computation of your net investment, okay, or basically, the correct term is that if there is an indirect cost paid by the by the lessor, then the implicit rate is somehow generally affected. That is why we will compute for a new implicit rate applicable to your new net investment. Okay? Because yun nga, kasi if we look at the definition on what is a net investment, it is the present value of rent received plus any initial direct cost paid by the lessor. Okay? So we should know the concept of the amortization schedule and the interpolation process. Okay? So that is subsequent recognition, no? Hoping na meron tayong natutunan talaga, although this is just a brief discussion on subsequent recognition, ha. Pinagsama na natin ang lessor at lessee. Okay? So, I will end this video na naman, part 3, kasi humahaba na siya, almost 1 hour na. In the next video, which is part 4, we will try to answer problems or exercises that relates to different transactions that could affect a lease transactions or different situations affecting a lease transaction. So, focus na tayo sa mga example. Okay? Because basically, we have already discussed the basic concepts. Application na tayo. Okay? So I guess that's it. So see you in the next video.